Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up for the first week of December 2017. First look at the ag markets. Corn continues to be in a sideways, lifeless trade. We're working through a large supply of corn out there from the physical standpoint. Harvest is over with. People are putting it away. It will have to be bid up, probably through basis, to get it back out. Not saying that the board will rally, but I'm sure basis will have to go to work to get those bushels out. The funds have pared back their short positions. 2 weeks ago they were over 200,000 short. Now they're only 160,000 short. So they've been able to buy back close to 40,000 contracts with minimal disruption to the market. So right now we're looking with the March corn being at that 350 area. Really kind of have to play off that 48 3/4, 49 1/4 area. We take out those levels and then we could really see another leg down. Otherwise, I think we have a little bit of room to move to the upside should there be some kind of weather issue down in South America or concerns about a weather issue and they start adding in premium. Any new high in the corn, though, will be met with selling, as there are a lot of sale orders above the market for this year's crop and for next year's crop as well. Beans are trying to make a story out of Argentina and South America and the dryness down there. The 11 to 15 day forecast has minimal rains. Want to watch to see if that lack of rains or arid rains stays out that way, or if it's pulled forward into the closer forecasts of 6 to 10 days. We saw a couple things happen this week. So we come in and we see that there's not a whole lot of chance for rains down in Argentina. We saw a gap higher on beans on Monday. We continued those gains, and then on Wednesday night we saw China step in. A lot of issues with loans and with banks over there, and we saw a lot of risk-off trade that night, and that brought us right back down. So basically unchanged for the week in the beans. Like I said, there is a little bit of a weather story for Argentina. We'll see how that plays out, but before we can actually play that weather market, on Tuesday we're going to have a USDA report, and on Tuesday they're looking at larger ending stocks, so we will see how that plays out. Over in the energies, we're past the Vienna hearing with OPEC. They decided to continue production cuts out a ways, so with that news behind us, a little bit of consolidation trade there too. We saw attempted sell-offs earlier on with that risk-off trade out of China, and that brought the CRB index down, that brought crude down, but now we've bounced back, just putting a little bit more premium in going into the weekends. A couple things to watch down the road. Watch Cruz down in Texas. He's barking about ethanol a lot, so we want to make sure that nothing is done with the RFSs. Supposedly Trump has our back. We'll see what happens with that. Also, remember that with this higher prices or these higher prices in crude, we've seen more and more rigs come online. We've also seen a very high production number in ethanol, but a high stock number there. So we're producing, we've got plenty of energy around, yet that market ran up because we didn't know what was going to happen out of OPEC at the Vienna meeting. That's behind us, so we might be able to trade sideways to a little bit lower now. As far as equities are concerned, equities are right up around the top for the year. Today we had non-farm payrolls, 228,000. And non-farm payrolls, 4.1% on the unemployment rate. You're also looking at earnings going up, all positive things, and that's continuing to build equities, and equities are continuing to build up. Now, the interesting thing is, too, the president came out and said, hey, you know what, this is the greatest stock market we've seen since I've been in, and you got to be cautious about that, because if that thing should ever retrace or have a big sell-off, well, it's going to be on the administration. They don't want to see that happen. So I'm not conspiracy talking here, but there's an emphasis on keeping that stock market up and rolling right now with this administration, because it does make them look good. Cattle market. It's been a tough week for cattle market. Starting off last Friday, we had a big down day. We're down over $5 in that market from a 120 level. Now we're down at 115.32. Boxes, though, boxes have stayed the same as where they were last Thursday compared to here this Friday. The thing that we've seen, though, is the load count is down. They're not able to push loads across. Exports for beef this week were terrible for the end of 2017. Moving forward, 2018, they pick up a little bit, but you're just not seeing that. Seasonal buying is behind us, and we're going to have some dark days coming up at the end of the month. I don't think you're going to be able to have the choice and select boxes support higher cattle prices for the next week or so. So I would see that thing be a little bit sideways to lower as well. The other element is feeders, and the feeders, it's a lot of computerized trading right now. And we're seeing a lot of liquidation that's happening there. You've got a difference of over $10 between where the feeder index is and where that January front month future is. So you're seeing guys getting out of those positions as they put more pressure on the feeders. You're seeing that that cattle market come off as well. Next week, a couple things to look at. First of all, weather on Sunday night. Like I said, you're going to see whether or not rains that are seen in the further out forecast are brought into the nearer term forecast. If that's consistency keeps there, then we'll probably kind of continue to be steady to a little bit lower on this bean and corn market. If they can't be pulled forward into a more reliable forecast, then we could see a little bit of a bounce again and chop around a little bit. Also next week, we're going to have the USDA's supply and demand report. With that supply and demand report, they're looking at pretty much just changing the demand side of things. In the corn, maybe a little bit better ethanol number, a little bit less on the exports, should wipe each other out, so I don't see any real fireworks on the corn side of things. Whereas on the bean side of things, you could maybe raise up crush, but not very much at all. Whereas with exports, we just haven't met the anticipated need out there to have that higher export number. So we could see that number fall back about 25 million, and then you've got a 455 million carry out for beans. So everybody's kind of factoring in a little bit higher bean carry out as well. So that's what we're looking for next week. Other than that, look at consolidated trades. No big real movement in this market as of yet, but there's going to be something that'll pop up down the road, and it seems like everybody's kind of playing for the upside on that move. That is end of broadcast.